There are various ways to invest in Bitcoin, both directly and indirectly. First, you can invest in a company that uses Bitcoin technology. Bitcoin is a risky investment, but many companies sell successful products that incorporate Bitcoin and blockchain technology. You can find several exchange traded funds that hold shares in various blockchain related companies, such as the Amplified Transformational Data Sharing ETF. Instead of investing directly in cryptocurrencies, they invest in the stocks of companies that use Bitcoin. It's safer, and most ETFs in this category outperform the market. Second, you can participate in Bitcoin mining. Bitcoin mining is simply allowing your computer to be used as a node for the public ledger. It's a topic worthy of its own blog post. But you should know that Bitcoin miners are rewarded with actual Bitcoin for their contributions. You could receive free Bitcoin without actually ever purchasing it, apart from what I just described. Let's take a look at some of the most popular ways people are investing in Bitcoin today and what they mean for investors. Buying standalone Bitcoin. The most obvious Bitcoin investment strategy is to buy standalone Bitcoin. Investors can take physical ownership of an asset by buying Bitcoin directly from an app such as Coinbase. This is an important difference because with Coinbase, investors can actually buy Bitcoin and store it in their own encrypted wallet. In this way, the investor simultaneously accesses the asset's price history and uses it as the currency for subsequent transactions. Owning a standalone Bitcoin is not much different from owning any other currency, except for the incredibly volatile fluctuations in value. It is important to note that not all online platforms or applications allow investors to own standalone Bitcoin. For example, on an online trading platform like Robinhood, people can invest in Bitcoin, but they cannot have investors own Bitcoin. Coinbase gives investors the key to their Bitcoin holdings, allowing them to transfer their assets to their wallets, but Robinhood doesn't. As a result, by investing in Bitcoin with Coinbase, investors can own their assets and treat them like currencies. Robinhood investors, on the other hand, can only take advantage of price fluctuations in their accounts and cannot transfer their holdings to an encrypted wallet. Investors planning to buy standalone Bitcoin need to understand the limitations of trading platforms before investing capital in cryptocurrencies. Grayscale Bitcoin Investment Trust, founded in 2013, Grayscale's Bitcoin Investment Trust has grown into a leader in the cryptocurrency industry. Grayscale has become a credible name in the fast growing sector, emphasizing the mass democratization of Bitcoin. Bitcoin is already decentralized, but Grayscale is giving more people more access to fast growing digital currencies. More specifically, Grayscale is an investment platform on the capital market that builds transparent, familiar investment vehicles for a growing asset class with unlimited upside. Grayscale owes its current success to making Bitcoin more accessible to everyone. In fact, Grayscale helped bridge the gap between the informed and the uninformed. To do so, Grayscale made it easier than ever to invest in Bitcoin. For example, Grayscale allows investors to hold Bitcoin in certain ERA, Roth ERA, and other brokerage and investor accounts. Amplified Transformational Data Sharing ETF, as its name suggests. The Amplified Transformational Data Sharing ETF is an exchange traded fund traded on the stock market. Investors may purchase shares of Block on the secondary market and increase their exposure to Bitcoin. More specifically, however, Block is an actively managed ETF that specializes in blockchain technology. That means fund managers constantly seek out businesses that focus on blockchain technology and invest in them. Therefore, anyone investing in Block is invested in a basket of blockchain technology companies. While Block may not give investors access to standalone Bitcoin, it does give them access to the companies which use blockchain and its transformational data sharing technologies. Bitwise 10 Private Index Fund. An investment in the Bitwise 10 Private Index Fund is an investment in the Bitwise 10 Large Cap Crypto Index. For those unfamiliar with the Bitwise 10 Large Cap Crypto Index, it tracks the return of the 10 largest cryptocurrency assets on the market. Therefore, investors who buy shares in this particular fund will be investing in the 10 largest crypto assets is measured and weighted by free float market capitalization. When the assets perform well, investors will realize gains proportionate to the shares they own. Tips for investing in Bitcoin. If you do decide that you want to try Bitcoin investing, be sure to heed the following tips. Understand your risk tolerance. As mentioned before, Bitcoin is a high risk investment and you should carefully review your risk tolerance before you invest. If you don't feel comfortable investing in volatile assets or only have a small sum of money to invest, you may want to consider other investment options. Diversify your portfolio. The best way to protect yourself from investment losses is to diversify your investment portfolio. Your primary investments should be low risk, like government bonds or index funds. Next, you should go for medium risk investments like real estate or corporate stocks. High risk investments like penny stocks or Bitcoin should be your smallest and least prioritized investments. Bitcoin is essentially the icing on the cake, the investment that could yield substantial profit but which you could still do fine without. Start small. If you're on the fence, start small. Cliff Hourwood, president of All Reverse Mortgage, recommends investing $10 per week. Many people still are unsure about whether or not cryptocurrencies will pan out, but with all the excitement surrounding crypto, many are still interested and don't want to miss it, he says. One of the most effective ways to invest in BTC is to invest just $10 a week. So if it doesn't work in the end, there's no risk but a healthy investment over time. It would be possible. It would be possible. Bitcoin investment strategy. There are many differences between buying Bitcoin and buying other stocks like stocks, but there are unique similarities that need to be addressed. Hold Bitcoin long term. Not all that different from the first strategy. Investors who want to hold onto Bitcoin for the long term are convinced it will appreciate over long periods of time. However, unlike the hodl strategy, long-term holders may be inclined to sell once they are satisfied with returns. These investors are convinced Bitcoin will increase in value, perhaps as serving as a new store of value, but aren't against selling for a profit when the time is right. Trade Bitcoin on short-term volatility. One of the most popular strategies for investing in Bitcoin relies on the asset's volatility, if for nothing else. Bitcoin has become synonymous with violent swings in valuation. Simply looking at a one-year chart will identify just how volatile Bitcoin can be, which bodes well for short-term traders. Not surprisingly, this strategy will have investors ride the ups and downs, selling at the peaks and buying on the dips. This is definitely the hardest of the strategies discussed and exposes investors to the most risk. However, it may also compound gains faster than those previously mentioned. Bitcoin is a popular type of cryptocurrency that utilizes a large chain of interconnected computers to store and protect your digital assets. Bitcoin is a highly volatile asset that's prone to large and fast swings in value, which presents an opportunity for large returns but also poses a tremendous risk. It is critical that you learn how to invest in Bitcoin responsibly before making any decisions. Be sure to diversify your investment portfolio to protect yourself from marketplace volatility. Bitcoin can be purchased through your bank or investing firm yet, though some organizations are working toward that possibility in the future. For now, you'll have to go through a cryptocurrency trading platform to exchange your US dollars for Bitcoin or other digital currencies. There are hundreds of cryptocurrency exchanges you can use to buy crypto online, but a few of the more popular ones are Coinbase, Gemini, and Kraken. These exchanges are online platforms where you can buy and sell cryptocurrencies. There are several factors that can be used to narrow your search for the right platform. Security. Investing in cryptocurrencies is not supported by central institutions such as FDIC guaranteed bank accounts. If your account is compromised or the platform that holds your coins is hacked, you run the risk of losing your investment. If you plan to keep crypto in your account on an exchange, use offline and cold storage and choose an exchange that is strongly protected from theft. Please, some exchanges also have independent insurance policies to protect investors from potential hacks. While fees should definitely be a consideration, experts say you also get what you pay for, especially when sticking to the bigger, more established exchanges like Coinbase. If an exchange has more protections, better security, or other important features to you, it may be worth slightly higher fees. Some exchanges charge fees based on a spread or margin on top of the market price. Others base fees on a flat rate or percentage of your total purchase, which can vary based on your location, payment method, and other factors. Exchanges with more active trading features often use a fee model determined by market price fluctuations, known as market taker fees. If you buy at the current market price, you'll be charged a taker fee, or you can set a price at which you want to buy and wait for the market to reach that point. That's known as a limit order and incurs a maker fee. Make sure you know what fees you'll be charged, which you can find on the exchange's website before signing up. The fee structure should be clearly stated.